Good morning, folks. Andrew Schartenberg here, your mortgage engineer. Today is Monday, January 31st. I apologize for the absence late last week. I was taking advantage of the snowy conditions up here in New England and was at Killington skiing. So today I've got a little bit of an extensive rate report and home buyer tip of the day for you. For mortgage rates, late last week, they dropped just slightly. So what I mean there is we went to 4.75% on conventional Fannie Mae, Freddie Mac 30-year fixed mortgage rates for the perfect scenario, 0 points. We were at 4.875, so you came down about an eighth of a percentage point. On FHA and VA mortgages, we were at 4.625 and we came down to 4.5, so 4.5, and that's again on the 30-year fixed 0 point perfect scenario loan basically. So this morning we see the 10-year Treasury note at a yield of 3.34. So that's about 10 basis points less than where it had been, which means that's good for mortgage rates. It's going to be a very busy week, guys, in terms of economic data that can affect the mortgage market and bond pricing. So Friday is going to be your most important day. It's going to be the most influential day, and that's because the employment situation is coming out. That's going to tell the country what the unemployment rate is, as well as the jobless claims and a number of other pieces of data that are related to jobs. So that is what most people are looking forward to this week, although the rest of the week is going to be very busy as well. Thirdly, watch Egypt. If any of you guys follow world news, you'll know that there's massive upheaval in Egypt right now, and that's actually pretty much what caused the slight drop in rates late last week. What tends to happen is when you have severe unrest in a certain portion of the world, that can spur what we call a flight to safety, where large institutional investors take their money out of the stock market and put it more into the bond market, thus decreasing the yield on bonds, and that certainly affects mortgage prices. So watch what happens in Egypt. That could be a wild card in the economic news that comes out this week. All right, now that's it for the rates today. What I want to talk to you about for your home buyer tip of the day, and this is probably geared more towards first-time buyers, is budgeting. I can't tell you how many of you folks come into my office and we go through the whole pre-qualification. I give you all the info on buying your first home. We sit together for about an hour and a half, and we finally get it down to the nitty-gritty of what your purchase price is going to be, the range for that. And a lot of times, I know that especially over the last 2 years, folks have been, paying attention to the media and making better decisions and not overspending themselves like they did 3 to 5 years ago when I had first gotten into this business. And I'm talking about my peer group, people that are probably 25 to 35 years of age. Though it certainly doesn't exclude younger or older folks as well. But a lot of folks do not have a budget in place, which is very, very important. You need to think about this stuff, guys, ahead of time. So just a couple bullet points. I don't want to get into it in too much detail, but here's some stuff that you should be thinking about before you even look at a house or come see me for a mortgage. Just at least that you've thought about it will put you on a better footing than otherwise. And the first thing is your mortgage payment. You want to keep in mind that you are going to be paying principal, interest, taxes, and insurance. And I talk about homeowners insurance. So don't forget to exclude the real estate taxes and the homeowners insurance. Also mortgage insurance. If you're putting less than 20% down, you're going to be faced with mortgage insurance as well, unless you're doing a rural housing loan or a VA loan. Any other loan, you're going to have mortgage insurance. And also, remember, maybe you're going to want to pay that loan off faster. So maybe you need to budget for being able to do a little bit extra towards the mortgage every month so that you can pay the principal out faster. Secondly, utilities. If you're renting right now, it's not going to be 100% true, but generally speaking, when you buy a home, your utility bills are going to go up. Your electricity, your heating, all going to go up. Car payments. Are you going to need a new one in the next couple of years? Do you have deferred maintenance on your current vehicle that you are going to have to budget for? Are you going to have $1,000 repair in the next 6 to 8 months? How much longer do you have on your current car note? That's actually a good thing. Maybe you don't have a whole lot of time left, and that's going to certainly help your affordability once you take on the new mortgage payment. Student loans, don't forget about them, especially if they're deferred. Remember that your payments are going to go up after a certain period of time on those student loans, so don't forget about them. Credit cards, do you make the minimum monthly payments or do you pay more than the minimum monthly payments? Obviously, you want to be paying more than the minimum monthly payments, but you definitely need to take into account your spending habits with the credit cards. Furnishings, don't forget, maybe you have a large apartment now and you have some great furniture, but you're going to be in a new house. You're going to have to, furnish the whole thing. So don't forget about that portion, guys. Furniture is very expensive. Appliances can be very expensive. Maintenance. Does the house need a new roof in the next 5 years? Are you going to want to do anything to increase its energy efficiency? Now that you're a homeowner, you're going to be responsible for all that kind of stuff. Lastly, and most importantly, your savings. Any good financial planner is going to tell you that you're going to need an emergency fund. That is exclusive of all the other stuff that we just talked about. Depending on your income level and your expenses, that emergency fund is going to be different for everyone. But you're definitely going to want to have an emergency fund. Any financial planner is going to be able to sit down with you and figure that out. Also, you're going to want to budget for your savings in that whole portion of it as well. Any realtor or mortgage professional probably has a good relationship with a number of financial planners that they can recommend you to, and I strongly suggest that you do that. So I know we went on a little bit longer than expected, guys. It's Monday. Let's hope that rates stay low this week, and we'll see you tomorrow.